Good morning, Vincent Sarroino from GroupeSarroino. I'm here today with Luigi Iafrancesco.
Got it.
When we're navigating the real estate market, we have important questions that are tailored to the province's regulations and processes as it pertains to mortgages. Mm-hmm. I will be asking Luigi some great questions, hopefully to educate the public or the viewers that are watching us today. But before I get to it, I want to say good morning.
Good morning.
And I want to say thank you for being here. I really appreciate it. And if you can be kind enough briefly to share your profile and your past and your current experience with the viewers.
So basically, I started off as an accountant. I did that for several years. I was kind of fed up of being stuck at a cubicle, so I had to figure out I always had a passion for real estate, so I had to figure out how do I combine finance and real estate, and the perfect mix, of course, was mortgages. So 7 or 8 years ago, I started working for a financial institution as a mortgage specialist, and it's about a year now that we went independent, and now I operate my own mortgage team as a mortgage broker at that point.
And the name of your team again?
Luigi Iafrancesco Mortgage Group.
Awesome. Thank you so much. So that being said, we'll jump right into our Q&A. I just wanted the audience to know currently what is the current mortgage rates and the terms of Quebec, and maybe you can just elaborate on the current market conditions and what most people are hoping for coming down the line in the next couple of months in terms of mortgage rates.
So in the last year and a half, it's been a roller coaster. You can only imagine that. I'll give an example. In just October of 2023, we were looking at rates of about 6%, 6.5%. Now those rates are about 5 to 5.5. So 1% difference, we're talking about a good 15 to 17% difference within just a matter of months. So right now, how does this affect homeowners or people trying to qualify for a mortgage? Whenever you're trying to qualify for a mortgage, it's always the rate you get plus 2%. So for example, everybody would now be qualifying on 7% interest instead of 8. So that's about 15%, 12.5 to 15% in mortgage power, additional mortgage power that you can borrow. So that's where the market is right now. So people right now, there is a forecast that they're saying rates are going to go down. I unfortunately do not have a crystal ball. I wish I did because I would play the lottery, but that's not the case. However, the forecasts are that rates are going down. However, people have to realize there's a lot of variables involved with that. There's the inflation rates, there's the cost of funds, and we're going to get into that as well because mortgages are based on the actual cost of funds that the banks borrow. So where's the market going? Hopefully with lower mortgage rates. However, we'll have to sit and see.
So a subsequent question to that is, you're an independent mortgage specialist, so you and your team are able to go out into the mortgage market and basically we'll call it shopping for mortgage rates and terms and conditions and find a bank where you would like to have your client, prospective client or buyer to get pre-approved, for example. Is there more challenges right now in knowing where to go, and do you have a lot of choices?
So pre-pandemic, we're looking at qualification rates of about 5.5%. Now, when we're looking at qualification rates, we're looking at 7 to 8%. So obviously, that's a major factor on mortgage qualifications. So with that, that's one of the reasons why we decided to go into the brokerage channel, because we have a lot more options for our clients. If it doesn't work at one bank, that's not a problem. We can send it to any other institution. So unfortunately, we had to evolve with the times, and due to mortgage qualifications, it is a lot more difficult for people to qualify for mortgages.
I think we can touch on that maybe another time, but I wanted to further ask that subject to these Quebec real estate market impact on the mortgage options. Yeah. So we're hear rumblings that we hear on the news, and I guess you probably get that information a little bit ahead of time, where we're hoping that the rate goes down and when it's going to go down. And the last thing we heard, or I heard personally, was that it might stay as is right now to June, and that the Bank of Canada will only adjust its rate as of June. Can you elaborate on that and why, or give a little brief explanation why that might be right now? Or
So my hope is that the rates will go down for the consumer. However, having said that, I do have my reservations because there's a lot of different variables. We're going to look at December of 2022. If you look at the past newspaper articles and media articles at that point, they were forecasting rate decreases in 2023. However, in 2023, inflation instead went up. And instead of having rate decreases, we had 3 rate increases in 2023. So as much as the government has pressure from the Canadian consumer to have the rates decreased, it really depends on the inflation rate. And it depends on how that evolves. If inflation rates do go lower, then yes, it does give them the power to lower the interest rate. However, at the same time, if they lower the interest rate, the inflation rate might go up again. So it's like almost a balancing act. All of this to say, yes, we do hope that the rates go down. That's what's forecasted in the market. You have some people that are very optimistic and say rates are going to go down significantly in the next year. You have some people that are a bit more conservative that say that rates are going to stay stagnant for the next year, year and a half. Unfortunately, Vince, it changes month to month, and it really depends on what's going to happen in the economy. Exactly.
Exactly. So, for someone that has a financially sound, for example, and are able to put, let's say, for argument's sake, 20% down, so they don't require mortgage insurance, correct? In this case,
Exactly.
Could they possibly get a preferred rate? Are banks providing preliminary better rates at this point sometimes?
Surprisingly enough, it's actually if you have an insured rate that you get a lower rate. The reason being is because since there's default insurance on the rate and the bank is protected against defaults, then there's less risk. If there's less risk, then they have to charge less of a premium for that rate. So normally speaking, if you do take an insurance like under 20% down, your rate is going to be lower than somebody that does put 20%.
Okay.
However, at the same time, if you put under 20% down, you have to pay the premium that goes with that. So there's also something called an insurable product. How this works is that when somebody puts 20% plus, or even like the sweet spot would be 35% plus, they have something that's called an insurable product where the bank is able to give default insurance on the loan. However, instead of the consumer paying the insurance premium, it's actually the bank paying the insurance premium.
Because of the higher amount of money they put down.
Exactly.
Okay.
So at that point, at 35% down, that's the sweet spot. There has to be a property value of $1 million and less. And normally it's either purchase or mortgage renewal. So if it's a refinance, it doesn't count. But that's one way to lower the mortgage rate. So in summary, if you do have an insured mortgage, you're always going to have a lower rate than a conventional mortgage just because of that risk premium. However, at the same time, under 20%, it's the consumer that pays for the premium. 20% plus, it's actually the bank that pays for that premium.
Oh, good to know. What can you expect now in terms of mortgages that are coming due? I know that was a question we're all asking. It's on all our minds of people who have mortgages or people who own investment properties. Landlords, we hear that in the news. A lot of landlords are having a rough time because, and they're now the Bill 31 that just came into effect for, I think it was yesterday that was announced. And where we can talk about that another time, but what can they expect to look at if it comes due, and what is going to be the consequence for some mortgages, and how will the banks deal with that currently?
So basically, we have two options. We can renew the exact same balance that we currently have, and if we renew under an insurable product, the rate would be lower than other situations. However, if people want the payment to resemble what they currently have at the lower interest rates, what I would recommend is re-extending on a 25 or 30-year amortization. Now, only because you re-extend to a 25 or 30 years, it doesn't necessarily mean you have to pay it off in 25 or 30 years. It's just lower mortgage payments for your budget. However, if you still want to pay it off in 15 or 20 years, you look at what that monthly payment would be, and you would have the ability to put additional payments every year to still make sure that you pay it off over 20 years. But at least it gives you that flexibility.
Good point on you saying that you can put money. There's a certain percentage that you're allowed to allocate to every year to your mortgage. What is that percentage again?
It depends from the institution. It varies from 10 to 20% additional every year.
So someone has to have those funds actually to do that, first of all. Is there another way, like going to bi-weekly or weekly, or changing the payment schedule to bring it down quicker?
So basically, when you go bi-weekly or weekly, essentially what you're doing, you're adding extra payments onto your mortgage every year. So for example, in a bi-weekly frequency, there's 26 payments in a year. So if you divide that by 2, it's as if you're making 13 monthly payments. So if you do monthly payments and you add one extra monthly payment per year, it comes out to more or less the same thing. However, it depends on your discipline. If you're somebody that says that you're actually able to put that extra monthly payment, then maybe go with a monthly option and do the additional payment. However, if you say, look, I'm not disciplined enough for that, then after go directly to the biweekly payment. So between monthly and biweekly, there's a significant difference because it is one additional monthly payment or one additional, monthly payment per year. However, from biweekly to weekly, there is a slight difference, but not as significant from monthly to biweekly.
And the reason why I asked that question is that people might have easier to budget on a bi-weekly basis because they have a fixed payment.
Exactly.
So, and I just wanted to know, what would you recommend, or is it's based on a one-off basis who the client is and what their capacity is to?
Everything has to be specific to the client. That's everything, because there's no cookie cutter solution. Everything has to, every solution that we provide has to be specific for that client. So if the client is getting paid on a semi-monthly frequency, then we'll find a solution around that. If it's bi-weekly, solution around that. But every situation is different. However, at the same time, yes, normally most people do get paid bi-weekly, and if that's the case for budgeting purposes, it would be better on bi-weekly payments.
Great, that's great information. Thank you.
Thank you.
So Luigi, our last question I have for you is mortgage qualifications are more difficult.
Yes.
Are there any insights or options that you can provide and maybe elaborate on?
So basically, we'd have to look at out-of-the-box solutions. So for anybody that has a very standard mortgage case, qualification is based 3.5 to 4 times their annual revenues. However, what if you don't have sufficient revenues, but you have a significant amount of assets? This is where we come to out-of-the-box solutions. So what we'll do is we'll look at the assets that the client owns, liquid investments, and also real estate investments, and we'll be able to provide solutions based on that. And given the fact that mortgage qualifications are more difficult at this time due to the higher rates, I would say there's a lot more popularity with these out-of-the-box solutions because people still need to find a solution, even though they don't fit exactly in the mold and in the box.
Great, that's very good information. I'm sure a lot of our wealthy home sellers and property owners will appreciate that response.
Exactly.
So in closing, I want to thank you for being here and thank you for that information. I would love to do this again. I'm sure there's a lot more things we can cover together, and hopefully we'll do this again.
Definitely, and thank you, Vince, for having us.
Keep on having him. So thank you for being here. If you want to get Luigi and his team's information, at the end of this video, please click on the get your free book, The Secrets of the Wealthy Home Seller. Go to the resource section. Get Luigi's contact information and his little brief profile, and contact him. Contact me if you need help, and we want to. That's it. Thank you.
Thank you, Vince.
Thank you for being here.